Hi everyone, this is Jason Burek of Wall Street for Main Street and Phil Kennedy of Kennedy Financial. Welcome back to another Welcome to Dystopia episode. This is episode number 43. So Phil, President Trump continues on his tour of Europe. He's about to next week go meet President Putin in Finland. The Democrats are trying to stop it. But President Trump has pretty much been basically, you can pick your analogy here, but throwing a hand grenade, machine gun, machete into the status quo, the economic and political elites, who have had this status quo of globalism, and Obama and George W. Bush, continuing on basically the same type of trade deals and stuff. So what are your views on the stuff that Trump has been able to accomplish so far?
Well, his strength is that his weakness has always been his strength. I mean, if you look back at his entire career, from the time even before he wrote Art of the Deal, he is essentially pretty irrational, when you think about some of his behavior, and that has aided him over the many decades that he's been successful in business. Nobody negotiates better than he does, but I think that's a result of his weakness in that he is probably not somebody you want to hang out with too often, right? Because he's not going to go along to get along. He's always going to assert his alpha male status. And I think working for him would probably be pretty tough. Look at all the people that have come and gone over the years. I don't know if I mentioned this during our last Welcome to Dystopia, but if you look at just The Apprentice and over the many seasons of that show and how he's been flanked by different businessmen who've worked for him over the years, and he's always complimenting them and saying, oh, this is my right-hand man, whatever they say goes, and I trust their judgment. And then you look at, all the firings that have taken place since he took the helm at the White House. It definitely would be tough to work for him, and I think that all we're seeing is that same behavior on the world stage. It's aided him in becoming a multi-billionaire, so why wouldn't it be successful? But I will give him credit in that a lot of people think, hey, he's playing four-dimensional chess or whatever. I won't give him that much credit. I will say he is a few steps ahead, and he knows when he makes these irrational demands that they're not going to be met. I think somebody was saying, when The Apprentice got big, next second season, he was like, they offered him $50,000 a show or something like that. And I'm not going to get my numbers right. I'm sure your audience can look it up, but it'll fall along these lines. And Trump was like, no, I'm worth way more than that. I want $1 million an episode. And ultimately they negotiated back down to $60,000 an episode. So, I think a lot of this is just chest puffing, and whether it's the tariffs or things he's going to say over in Europe right now, I think it's just his typical Art of the Deal negotiation tactics. But the fact of the matter is he said it himself a long time ago, in that if you owe the bank $1 million, then you've got a problem. But if you owe the bank $1 billion, they've got a problem. And I think the rest of the world has a problem because they have a debtor like the United States that can't pay up. And that's something that we should hear on the news every single night. But despite, the fact that we in the alternative financial community continue to talk about this year after year, they've managed to keep this thing afloat somehow. And it's going to eventually sink to the bottom. But, this next President Trump's doing a good job of seemingly keeping things together. And I know that's what we're going to talk about for the remainder of this show. How are things really chugging along? But that's kind of my 2 cents on him and how he's holding the world economy together, or at least the U.S. economy, by communicating with the world.
Well, they've also, the elites, the economic and political elites, aka the central banks, have kept things together with tens of trillions of dollars in quantitative easing, currency swaps, money and credit. So the number, if I had to guess, like an educated guess on the total number, it's over 65 trillion since 2000.
Yep.
Since 2008. It's over 65 trillion. I could do kind of an itemized approximation of it maybe for another short video. But did you catch what George Soros said about Trump and nationalism? He said that President Trump and nationalism, not only in the U.S., but also now growing in England with Brexit and elsewhere, are quote-unquote ruining everything.
Yeah, I know. I was happy to hear him say that, to be honest with you. Anything that he dislikes is probably something that's good for the world. So, yeah, it's comforting to see that. I think he said something, everything they've worked for is falling apart. So, yeah, that's good. It makes me feel better.
Yeah, this trade war that Trump is really pushing with China, not just with China, also Europe and Canada and Mexico, it's getting crazy, especially with China. I mean, the press releases, if you just go back on the press releases, Phil, for the last couple of months, I mean, it's flip-flopping. It's mind games. It's part of that 3D or 4D chess that you were talking about. So basically, when the North Korea negotiations, when he was in Singapore with Kim Jong-un negotiating, right, he said that the trade war with China was, quote-unquote, on hold, right? It was going to take a break. And it took, I think, a break for all of, a week or a couple days.
Right.
And then there was another press release out that there was going to be a 25% tariff on Chinese technology companies and stuff trying to import goods into the U.S. And now the latest one, because, it's just a series of press releases. I think some of the tariffs started earlier this week in the U.S. on Chinese goods, but he's claiming that there's going to be $200 billion in tariffs. But China can kind of counteract this with maybe devaluing their currency, so the RMB. So we'll have to see, how this trade war progresses. It'll be something we'll be talking about a lot on the show as 2018 draws to a close, and I'm sure we're going to be talking about this in 2019 as well. But President Trump has also been talking about, and I think this is important for the listeners, I want to draw attention to this, the tweets now on oil prices. So we're recording this on Friday, July 13th, 2018. I'm not superstitious, but for our listeners who are, there's I think a really scary movie that just came out today. I forget which one. The Rock movie is coming out today with The Heights. That movie, that's a copy of Die Hard. But we're at WTI crude prices of $71.45, Brent crude at $75.67 when we're recording this. The dollar index is almost at 95. So it's rallied really strongly since March from lows of around 88-ish back to almost 95. It did touch 95 briefly. It's taking a little break. So, in spite of a strong dollar, the oil price is pretty strong. President Trump is aware of this, Phil. And I think this is important. He's tweeted 3 times about this in the last month or so. And he's calling out the Saudis and OPEC for not increasing oil production fast enough. And I think this goes back to Trump understanding how the economy works better than almost every other politician before him because, he did go to Wharton. He has real-world experience. And he understands that with, his tax cuts, without cutting government spending, that there is the possibility for a lot worse inflation. And one of the things that inflation could show up in first is gasoline and oil prices. And so we have had, higher gasoline and oil prices recently, especially 2018. The oil prices have rallied a lot since the summer of 2017. And I think Trump is trying to offset this inflation that he knows, monetary inflation that he knows is going to be coming from the Trump tax cuts, from these larger budget deficits that he has planned in the future. And he wants to try to maintain the oil price before it gets out of control.
Yeah, well, it already feels like it's out of control. I don't know if I told you, but in my day job, forensic accounting, fraud examination, I have a company car, and it's a American SUV. It's pretty big, and my personal car is a Japanese 4-door Toyota Corolla. So I haven't really been paying attention until I went to fill up the company car recently. And here in the Northern Virginia area, gas is already up over $3. I think it's like $3.19 a lot of stations, and it's a big gas guzzling tank, and you really feel that filling that thing up. And luckily, the company happens to pay for it. But if that is your vehicle and you use that for construction because you are helping to contribute to the ever-increasing number of commercial and residential properties here in the Northern Virginia area, that's a pinch on you. And I think that's Trump's base. Even Dave Chappelle said it when he went to go vote in Ohio. He knew that Trump was going to win because, that polling station parking lot was full of pickup trucks. And that's his base, and I think he knows, hey, we got to keep this under control, because that is a big variable expense for the little man who's just trying to make ends meet. So he's probably wise to be concerned about that. And hey, he does have one other concern. In fact, I got him on the phone here. If you give me a second.
Let's say China. 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 I have to have my China.
So he's obviously concerned about China too. If you haven't ever heard that before, he probably should be, because we will lose a trade war to China. And I think that goes back to some of the initial the comments I was making in the beginning of the show. He is positioning himself as if he's going to, just like that Apprentice show, be getting $1 million an episode. But they hold all the cards, right? They still make everything.
Well, I disagree with you on that. I think no one wins in a trade war, because if China's probably going to retaliate with either tariffs on U.S. imported U.S. goods and or devalue their currency. The majority of Chinese citizens, if they do another massive devaluation, they're going to lose too. So there's not going to be President Trump's going to claim victory. This is just part of who he is. So if this trade war drags on, Trump will claim some type of victory. It'll be spun like a normal politician, but in my opinion, from looking at financial history, going back Smoot-Hawley and others, no one in a vicious trade war, no one really wins. Maybe a few key groups here or there. Maybe there's like a steel plant in Kentucky that doesn't close, or an aluminum factory in another state that doesn't close, or a steel manufacturer in Pittsburgh or Pennsylvania that does well. But the majority of people are not going to be better off.
Well, I think, I definitely agree with you when it comes to a trade war. We're of the same mind. My Austrian economics hat is always on. But what I'm getting at is, if you look at our typical friend, neighbor, loved one who doesn't really understand the benefit of the relationship that we've had with China over, say, the last 20 or 30 years, then they really aren't going to understand why their standard of living, the quality of life, their ability to obtain cheap goods suddenly went away. And we've never really had to deal, certainly in your lifetime and mine, with the austere conditions that my grandmother seemed to always be preparing for, turning bathrobes into coats and things like that, because she was a product of the Depression. Always got to save for a rainy day and never throwing anything away. So that's what I mean by we would lose a trade war, because I think psychologically, it's very difficult in life. I don't know if any of your listeners have ever experienced this, but I did once. It was an opportunity to take 2 steps back so I could take 3 steps forward. But it's very difficult in life to go backwards in income. And that's essentially what we'd be doing as a nation if we really tried to sustain a long-term trade war.
Well, England did have an empire, and England has never recovered, basically. I mean, the British economy, it's gotten financialized, so if you work in London banking, you're doing well, but the majority of England's economy has not done well since England lost their empire and the world reserve currency back then. Yeah,
and look at how many expats live outside of the UK. I mean, I don't know where I read it, but it's like a considerable number. You know how like you hear that more Puerto Ricans live in New York City than Puerto Rico? It's something like that.
Well, I don't think they're taxed like Americans are, because Americans are still taxed for living abroad. Although I think the first $90,000 of your income, if you live out of the United States, is not taxed. At least that used to be the law, unless it changed. But Americans are still very heavily taxed. And, we've talked about this on past shows with FACTA. If you try to give up your American citizenship, you have an enormous tax bill. If you're an American trying to bank in foreign banks, it's really difficult now. The laws have changed. The U.S. is so draconian with that. But I want to talk now about the stock market. So, in the past shows, Welcome to Dystopia, I think we covered gold and silver probably too much. I want to focus on more important financial topics. And right now, the stock market has had enormous rallies. So I have charts up from the NASDAQ and the S&P 500. And really for the last 5 years, the NASDAQ and the S&P 500 have done superbly. and that was even before President Trump. And I think, a lot of that is there's a number of factors into that. Obviously, there's a lot of capital that has come in from other countries into the United States, into the general stock market. It's also gone into bonds and real estate, whether that's in other main cities in other countries or real estate here in the United States. But the S&P is basically doubled in the last 5 years. If you look at a long-term chart of the S&P 500, it's gone parabolic. And the NASDAQ is now at all-time highs as well. Who would have thunk that? After the technology bubble burst, the NASDAQ since 2013 has more than doubled, and it's gone parabolic as well. And there's really, I don't know if you saw this article, Phil. There's really only a handful of technology stocks that are causing this. Amazon is the main reason. Amazon's caused, I think, 30% rise in this. And the other 4 or 5 main large technology stocks, basically the FANG stocks, have accounted for almost all of the other move. So a lot of these other large companies in these indices are not doing that well with revenues and earnings, but this handful of technology stocks are just killing it, and they're moving the things higher. The other thing besides all this QE liquidity, central bank capital that's come into general stocks is the index fund investing. So as perception is reality in the stock market. So if stocks are doing well, a lot of human beings are not really value investors. They don't really have patience. If people say that they have patience, they really don't. This is from experience and with talking with people and seeing how their investment behavior reacts. So if something is already going up, human beings tend to be herd mentality. Lemmings, chase the price higher. We saw this with cryptocurrencies, right, Phil? We saw this with cryptocurrencies. We saw this with gold in 2010 and 11. We saw this with technology stocks 15 or 20 years ago in 1999 and 2000. Excuse me, not 15 years ago, but 1999 and 2000. So, the stocks have done very, very well. And because of this, you have some of the most brilliant minds in finance. Hedge fund managers like David Einhorn, who I think is one of the smartest, most brilliant minds in finance, one of the best stock pickers. And David's not losing money. David's still making money, but he's not performing to the levels that you would if you just bought an index fund. So if you just went on Charles Schwab or TD Ameritrade or E-Trade account and you just bought a general stock market index fund the last 5 years, you could have basically beaten a lot of these hedge fund manager types like Hugh Hendry and David Einhorn. And, a lot of people would say, oh, we don't need money managers anymore. Computers will do that with the high-frequency trading and the index fund. We don't need smart financial professionals to manage money anymore. But I think this is more of a warning sign that this is turning into a bubble because people think that they can just set it and forget it and put money into an index fund and that they're going to make money.
Yeah, you're right. I would only have an exception with one thing you said. You said the market's been good over the last 5 years. And I would say, really, the market was stagnant from 2014 through the end of 2016. It was only up like 5% from the summer of 2014 through just before the election. And then we just had this unprecedented, totally irrational, illogical move from the election all the way up to the beginning of this year. And then lo and behold, in late January, we start to see what I think, in my opinion, is the air coming out of the bubble. And we haven't really gotten back up. And if you look at the market on the year, let's just take the S&P 500 from January 2nd through today, it's only up 4%, not even 4%. And at times it's been down, 1,500 points in one day back, in early February. So I don't know what the president's working group on financial markets is able to do behind the scene, but me personally, and I think I know I've said this on my show, and maybe I've even said it on Wall Street for Main Street, but my 401k has been out of the market since S&P hit 2,000. And sure, I've missed out on an extra 800 points, but in my, again, humble opinion, I wouldn't be surprised if we could see a day where the S&P loses 500 points in a day, and then 300 the subsequent, and then ultimately is cut in half or loses, 60 or 70%. I just don't know why. Anytime they say, hey, there's something new, whether it be across a ship that can cross the Atlantic and never sink, or a type of technology in the .coms that's going to revolutionize things, or a hedge fund like long-term capital management. Hey, we've got the most brilliant minds in the world. We've got it all figured out. Don't you worry. It's all under control. I'm always very suspicious. So, and I definitely, even though I was definitely excited about the bubble taking place in Bitcoin during the end of 2017, we knew in the short run it was unsustainable. In the long run, I'm still very optimistic, and I continue to state the crypto markets will not be a full-fledged bubble until it's like worldwide trillions and trillions of dollars. But I think David Einhorn's investors have a lot of reasons to be concerned, and our president, he has an excellent ability to put confidence in the hearts of people. But in the long run, the laws of economics are always going to play out. And, it would be totally irrational. Like, you and I would both agree, hey, in the next 100 years, is there going to be another depression? Is there going to be a day when the market drops 25%? I'd say in the next 100 years, Jason, that there's probably a very good chance, and that's going to happen. And especially if you look at, historically speaking, a 10-year economic expansion, a 10-year increase in the value of stocks worldwide, especially in the United States, that's unsustainable. And better than I. What exactly? Where are we record-wise in terms of this financial expansion since the .com bubble, or the housing crisis?
We're also clearly, depending on which valuation metric you use, it's one of the four, if not the most overvalued stock market of all time, depending upon which valuation metric you want to use. But, David Einhorn, despite making money investing, every single quarter, he's consistently solid. He's had record withdrawals. So I don't remember if I mentioned the withdrawal part. So people are taking money out faster and faster now from David Einhorn. Hugh Hendry earlier this year had to shut down his hedge fund. And I think a lot of the reasoning is the central bankers. At least that's the reasoning that Hugh Hendry gave, is he couldn't figure out what the central bankers were doing. Every time he would set trades based on how he thinks the markets would react, based on what the different central banks would do, the markets would do something differently. And David Einhorn is more of a very hardcore value investor, rather than some of the other different investing styles out there, rather than investing fully for growth or fully for momentum, or using a lot of technical analysis or some of the other different investing methodologies. And really, for a while now, Phil, value investors have gotten killed. So value investors normally have not gotten killed for this long, but we're not in any normal markets right now. The other point I would add too is that, yes, I mentioned that stocks have been doing well for 5 years or so, really since the 2008 financial crisis. But, and you won't hear this on the mainstream financial media, if you go back a lot further, if you go back to when the tech bubble crashed, if your time frame was longer, gold has still outperformed all the general stock market indices. So if you bought gold right after the technology bubble burst in 1999 and 2000, you've done well. But that's a longer time frame. And sentiment, especially in the West, here in the United States and Canada, the sentiment for gold and silver is just extremely bearish. So only professionals are really buying any types of gold investments right now. The demand for gold and silver is really out of China and India. The Russian central bank is also buying, but that's probably to hedge, just in case President Trump does listen to the politicians here in D.C. to put more sanctions on Russia. So that's a hedge to protect themselves, because Russia's had really bad sanctions on them in the past. But we live in very interesting times. In the past with correlations, normally when the dollar index was having a rally like this, the oil price would not be this strong. Emerging markets, the other thing with the dollar rally is that, and I interviewed a couple weeks ago Jim Poplava. I don't know if you listened to that. My listeners should go back and listen to my interview with Jim Poplava, and he outlines that, and I mentioned this earlier in the interview, perception is reality right now for the markets, that the market perceives the main risk not to be the U.S.'s debt problem, the U.S.'s budget deficits, any of those things right now. The main issue that the market is looking at, the main issues, are Europe, the European banks, and also emerging markets. And George Soros has even said recently that he thinks the dollar is already too strong, and that's causing enormous problems with emerging markets. In my interview with Jim Poplava, I thought the number was closer to around 10 or 11 trillion dollars, but Jim Poplava put the number around 20 trillion dollars when you combine emerging market government debt with emerging market private sector debt, that there's over 20 trillion dollars in US dollar denominated debt in emerging markets. And they thought the hedge fund managers are calling this a dollar shortage, but it's really an irresponsible borrowing by emerging market governments, emerging market banks, emerging market corporations, betting that the dollar would be weak and their own currency would be strong, and that they could pay back their dollar-denominated debt with a stronger currency and cheaper dollars. And that's not what's happening right now. So in the past, some of the past financial crises over the last, 20 or 30 years, whether it was the Asian tiger crisis or the tequila crisis, Phil, a lot of these crises started from countries, and they were small countries, that had overborrowed in dollar-denominated debt. The U.S. dollar had a brief rally, and it caused enormous pain, and there was a chain reaction. So that could be why the dollar index is having a rally right now, and the market perceives the emerging markets and Europe and European banks as the two most major economic landmines, rather than the problems in the U.S., at least for the short term in the present time right now.
Do you see the dollar index getting back over 1?
100?
Yeah.
Maybe. We'll have to see. I've said this on the short videos a month or two ago that I did, that the real crisis number to me is 102.
Okay.
So if the dollar index, it was 102, I think, in January of 2017, and then it went all the way down. It had a big bear market for about a year, from a little over a year, from 102 down to 88. So that was, dollar bearish. And obviously people who are momentum and trend traders, when the dollar hit 88, they thought the dollar would go even lower. And the dollar held support levels at the 88 range, and it's had a rally since March from 88 to 95-ish. It's a little below 95 when we're recording this. So my listeners, they should pay attention to the dollar index. The 102 is the number where it's going to really start causing pain, because if it starts getting stronger than 102, someone's going to start to go bankrupt.
Yeah.
So I think, the goal, first of all, I want to add to, Phil, that President Trump and his Treasury Secretary Mnuchin, they don't want a strong dollar. They also don't want the dollar to collapse quickly. They want, like what Jim Rickard says, they want a managed, controlled devaluation. So they want a gradual dropping of the dollar's value. The problem is that there's so many financial problems in European banks and elsewhere. Obviously, the U.S. has problems, but the market is perceiving that because the U.S. has the world's reserve currency, that it's not an imminent problem. So unless that perception changes, the dollar rally will probably continue, at least in the short term. Listeners, there's no real enormous overhead resistance until about 96, 97. If it breaks through that, it'll test 100, 102 range. But I don't see any normal trouble yet. I don't agree with George Soros that this dollar index level is going to collapse everything. George Soros has said it will. But the emerging market currencies, a lot of them are not doing well against the dollar. And surprisingly, Phil, something that a lot of the gold bulls say is that, if the dollar is not doing well if the gold price is not doing well in US dollar terms, well, the gold price is doing well in all the other currencies and emerging market currencies. But really, since March, I did a short little video on this on Friday last week. The gold price in a lot of other currencies, except for like the Argentine peso and a few other currencies, the gold price is not doing well either. The gold prices, you would think, with the problems in Europe, Phil, that the gold price would have a nice rally, but it's actually not.
Yeah. Well, I'd just be surprised if it gets over 100. In fact, to me, it seems like this is more of a bounce, a temporary, unsustainable bounce. But I will tell you that my emerging market portfolio has paid a price since this bounce occurred. But I just can't imagine what this would do to everything they've tried to resurrect if we did get back into that 102 or even 103 range. I think they would reverse course pretty quickly, because if the S&P gets back down to 2,000, like I was saying, where I pulled out, it's just going to be, a Keynesian stimulus heaven all over again. I don't foresee them allowing that to happen. And if it does happen, it's going to be reversed quickly. You know what I mean?
The elites could do what they did with the Plaza Accord, if you're familiar with that. Or I'll attach a link for the listeners to look that up on Wikipedia. The Plaza Accord was where the dollar was getting too strong, and it almost caused another crisis about 20 years ago. And the U.S. agreed to devalue the dollar because it was getting too strong, and it was going to start collapsing emerging market banks and emerging market governments that had overborrowed in dollars. So if it does rise too quickly, they could potentially do similar to that with a Plaza Accord. But you mentioned emerging market stocks. I think this is an important topic here. And this is one of the dangers now with the new technology available in the financial system, that capital can move at almost the speed of light, in and out. Many billions of dollars in capital, Phil, can move in and out of positions, trades, leverage at almost the speed of light, unless it's in a liquid market. But in 2017, an enormous amount of investor capital went into emerging market, stock growth funds. So emerging markets were fat and happy. There was the opportunity there to put that capital to work, maybe fund small businesses there in emerging markets, or companies that were already established and wanted to grow. And now really what we've seen in not even really a year is that trend has reversed. And so now an enormous amount of capital that was in emerging markets, probably on fear of the things that we've discussed in the last couple of minutes, of currencies against the dollar, of dollar-denominated debt, has panicked and in capital flight, and it's left those emerging markets. Maybe it's gone to cash, maybe it's gone to treasuries, maybe it's gone into regular, perceived as safer, larger U.S. stocks, despite the valuations. And so, someone like David Einhorn, who doesn't normally study the global macro picture enough, he's more of a bottom-up value investor type, he's not going to be able to understand all the things that are going on quite as much, because he's not paying attention to the global macro picture as much as someone who focuses on it every day. And this is a problem with regular value investors, is, Warren Buffett would say, on a value investor, you buy it and you hold it for a long period of time. Well, what happens when the rules are changed?
Yeah.
And the central banks are changing the rules. Look at what the Federal Reserve has already done. So the Federal Reserve's publicly stated balance sheet, Phil, it's got as high as $4.5 trillion, give or take. And now, due to quantitative tightening, which I think is a really stupid word, a stupid phrase, it should just be, in plain English, balance sheet reduction.
Right.
It's now, they've sold off $200 billion in assets. So if you go to their website, the St. Louis Fed's website that tracks this, it's under $4.3 trillion now. So yes, 200 billion sounds like a large number, but 200 billion compared to 4.5 trillion is really not a large percentage. But if the other central banks, the European Central Bank, the Bank of Japan, are at least claiming right now, and they're with me, at least for me, talk is cheap with central bankers. So when they say they're going to do something, I really don't trust them until we have proof that they actually did it. But we have the ECB and the Bank of Japan claiming that they're going to taper. The ECB claims that they're going to raise interest rates in 2019. I think the problems, and if you listen to my Jim Poplava interview, he said the problems that the European banks are getting even worse. He said the market hasn't even fully figured out that the Spanish banks are even worse than the Italian banks, and the Italian banks already have around 30% non-performing loans, which with fractional reserve banking means that they're insolvent.
Yeah, well, it's interesting just watching and observing this as an adult. I've said it before, when I was a kid, I didn't realize adults would lie so blatantly to one another. And now that I am adult, and now that I study this stuff like you on a day-to-day basis, I think what they're doing is they're just hoping to wait out the clock long enough so that your typical American thinks that the housing crisis was ancient history. I often go back to this video, and if I could have found the clip in time, I would have played it. But I remember sitting on my couch in March of 2009 when Bernanke was in a 60 Minutes interview with Scott Pelley. And he sat there with a straight face, but a quivering voice, because he wasn't really used to cameras. And in fact, they couldn't even remember the last time, if ever, a Federal Reserve chairman had done an interview like this. And he sat there with a straight face, and he's like, we've unleashed quantitative easing. It's not money printing. It's called quantitative easing. And, we've increased the size of our balance sheet, but we're going to unwind it one day, and that's what we intend to do. And that was in March of 2009. And if Scott Pelley had the guts, like Jason Burak or Phil Kennedy, his next question would have been, well, certainly Mr. Bernanke by, I don't know, let's just pick a crazy date, Chairman Bernanke. Let's pick March of 2019. That's just insane, right? Like, you'll be back to a normal level by then, wouldn't you? Oh, of course, Jason, of course, Phil. Yeah, absolutely. What are you, nuts? That would be crazy. Even John Maynard Keynes wouldn't have thought of anything that crazy. So that's really what they're doing. They're trying to wait it out long enough so that, first off, the big thing they had to wait out was they didn't want a woman, Janet Yellen, or a historic president like Barack Obama to take the blame for it. That was the most important thing. And now they've found their fall guy. And, they'll be more than happy to pull the rug out from under him when the time is right. But, the other thing, too, though, he is the president, right? And we do have the Pledge Protection Team, and who knows what goes on with the levers behind the scenes there and how much control he has with that. But, isn't it asinine? Can you imagine if you were sitting across from Ben Bernanke in March 2009 and you would have said, surely your balance sheet, how many trillions is it now, Jason? Like, surely it won't be that high in 2018, right?
And it's not even counting the currency swaps, which the Fed doesn't even count on its balance sheet. So it's funny you brought up Bernanke. Actually, I want to tell the story. So I do get emails and comments from listeners asking me which books I'm reading. So billionaire money manager, hedge fund manager Ray Dalio, he's a brilliant guy. His new book, it's about a year old. It's called Principles. It's available on Amazon audiobook. If you want to get inside the mind of a billionaire, there's a lot of useful advice in there about life, how to build a business. There's good stuff in there. Okay. But there was a very interesting story also in there as well. And he disclosed, and I was surprised he disclosed this, and he was actually bragging about this, that he had he was already a billionaire by then, so this probably didn't really make him that much money. In fact, recently Dalio has underperformed the market as his money management has not been doing well. But he was bragging in this book, Principles, that he had secret meetings with Ben Bernanke, Janet Yellen, and even Mario Draghi over the years. And he flew to Europe, and this was when Europe was in trouble in 2011 and 12. Ray Dalio he had written this white paper, I think in 2012 or so, give or take, maybe wrote it in 2011, and he spent a year promoting it, and it was called the Beautiful Deleveraging White Paper. So our listeners can Google that and go back and look it up and read it. I think it's only about 10 pages. It argues for nominal GDP targeting to make sure that GDP is higher than nominal interest rates, and it basically argues for a lot more stagflation. Dalio flew to Europe, Draghi, and he was telling Draghi in no uncertain terms that Draghi cannot allow deflation. He has to do QE, and he must, basically violate the bylaws of the European Central Bank and not allow deflation and do massive amounts of QE. And if you look at basically what the European Central Bank started to do, it started off small with small amounts of QE, and now here we are only like 5 or 6 years later with the ECB balance sheet over $5 trillion.
Yeah.
And so, Dalio, the funny thing, Dalio, and if you read the book, I'm only about halfway through the book right now, but Dalio gives himself credit, pats himself on the back, and talks about how the United States and Europe have had a beautiful deleveraging. There's just no evidence of this. There's no evidence anything was deleveraged. In fact, it's the exact goddamn opposite. Okay? Look at the private sector debt in the United States. There's been over $4 trillion in share buybacks since the 2008 financial crisis, $4 trillion, most of it with debt. The IMF has come out with a warning recently, Phil, warning that there's about 22% of all companies on the planet, private companies, are zombie companies, that they have to refinance their debt in the next couple years, and they can't ever pay their principal back, and they have to refinance their debt just to keep the doors open. So they can't pay off their debt. They can only pay the interest payments on their debt, and if they have to keep refinancing just to not go bankrupt. So that's basically a zombie company because you can't ever pay back your debt. So this Dalio that he's promoting, go and read the book. There is useful things in there, but there's also hubris, arrogance, some ridiculous things in there that I was just shocked that he was disclosing. You know, bragging that you got private meetings with Bernanke and Yellen, and that you convinced Mario Draghi to do massive amounts of QE. Just pretty. I was shocked that he disclosed it. But you know, among his Dalio's politics, he's not a libertarian. He's a very hardcore Democrat type. So he figures that by keeping the status quo alive and government spending all that money on people and maintaining the status quo, that he probably figures he was helping people.
Yeah, well, they're not, and I see it. I'm always looking for, like we said in the first episode that I was on, I'm always looking for little indicators. You're the macro guy. I'm the micro guy. I'm just going to take a quick sip here. Fill in the blank while I'm taking a sip of water.
Yeah, so, I mean, Dalio, it's just really unbelievable. I was shocked to actually hear him disclose some of that stuff, but for $20 or so for that book, it's definitely worth checking it out. Get inside the mind of a billionaire, see how he thinks and how he built this business. The rest of the show, I mean, you talked to Phil about lying. So, I mean, the funny thing, if you put on the TV right now, you would find at least a couple lies a minute on most of the mainstream financial media, on pretty much all the news channels, including Fox. So it's the bias, the propaganda, the spin is just incredible. With the testimony from Strzok and at least obviously the Lisa Page testimony is not being live today, but the stuff, seeing that yesterday, the circus that with the Peter Strzok stuff and the stuff the Democrats were pulling and how Strzok was reacting. I mean, the attitude of a lot of these bureaucrats is just here in the Washington, D.C. metro area is just really unbelievable.
Right. Well, I love to use a sports analogy. Let's say you and I, agree to anything, whether it's cards, poker, CrossFit, a triathlon, you name any kind of competition. In fact, let's go with baseball because I got a great example from this one. Do you remember that umpire in that big game several years ago? He was a first base umpire, and he had a blown call that the stadium erupted. Both teams kind of poured out the dugout. It was obvious, like everyone knew he blew the call, and there was a big argument afterward. And there was a press conference, and the ump came, and he was sorely apologetic, right? Because he's an umpire, and I imagine most umpires have played baseball their whole lives. They love baseball. They probably have a favorite team. But ultimately, why is every major league umpire so committed to the game? Because they want to preserve the integrity of that game. They want everyone to know who the winner and loser is. They call balls and strikes. They don't play favorites. There's never been in recent years an example of a Dunleavy who was like betting on the game and shaving points and things like that. And really, when you see these hearings and you see how partisan they are, for me, I tweeted out yesterday, what we are witnessing firsthand is a national divorce. We have reached the point of irreconcilable differences. And that is what we are witnessing. And it's clear to me, I'm going to see Ron Paul on August 18th here at the Dulles Marriott. It is clear that we all need to peacefully go our separate ways. This experiment is long in the tooth. It's waning, and it's reaching the end of the road. And if we can't agree on preserving the integrity of the game, calling balls and strikes, then there's no use in playing ball together anymore.
And I'm a big baseball fan. I mean, they have instant replay now. That may help a little bit. Some would argue it would hurt. Sometimes it hurts. It's not always fully accurate anyways. But, in terms of what you said, I mean, the Democrats are eating themselves now. Look, I saw an interview recently with a moderate Democrat, and he said he was kicked out. He was a prominent one. He worked in administrations in the past, and he said he was kicked out of his own party because he's not radical enough. And he said basically, the radicals, the Marxists, the socialists are taking over the Democrat Party now, and if you're a moderate Democrat and you want to, reach across the aisle and halfway rational deals that a good amount of Americans would at least be in favor of, that the radicals won't allow you to be there anymore.
Mm-hmm.
And I think, Trump is changing the Republican Party too. So yeah, we're in the midst of probably, I would call it an ideological civil war. So we're not in the streets yet where a lot of people are killing each other, but I hope I'm wrong about this. But I think, we're headed down those ways. We're headed down those ways where people there's a bunch of different issues where people will not see eye to eye on. There's people out there that ignore the reality of socialism and the over 100 million people that socialism governments have killed their own citizens in, the 20th century. And people say, oh, that wasn't real socialism. I've heard it all the time. Look what's happening in Venezuela. And the people are saying, no, it's not real socialism. I saw a propaganda chart online of someone saying that North Korea and Venezuela were not real socialism and that was state capitalism.
Yeah.
Yeah. So everything is labeled as some version of capitalism. So socialism doesn't take any blame. I'm not saying everyone does this, but there was a blue checkmark Twitter handle that was putting out this propaganda. And so we're in the midst of this, and it's really just insane, and it's corrupting so many different things, like the rule of law. It's tough to even have a discussion. I remember in college, Phil, that I would go on dates with women who were Democrats, and we wouldn't have any problems. We wouldn't even discuss politics. There was no problems. And that was more than 10 years ago. But, nowadays, like, the women who are Democrats, like, they don't even want to talk to me. In fact, they probably don't even want me being alive. Some of them.
Right. Well, Jason, I grew up in Frederick, Maryland, just south of Gettysburg. And I vividly remember on field trips going up there, and the tour guy would say, in the Civil War, brother fought against brother. And I was like, man, I got a little brother. He's my co-host on Kennedy Financial. I love that guy. I can't imagine fighting him. Well, that's probably because we both have the same set of deeply held personal beliefs in sound money, liberty, freedom, and Austrian economics. But if he was a Bernie Sanders supporter who thought, no, I hire politicians to come steal your stuff, whether you like it or not, and you've signed an invisible social contract, and this is what you've agreed to, I can see brother fighting against brother, and that's the point we've reached. We've reached the point of irreconcilable differences, and there needs to be a peaceful separation. Unfortunately, I don't think it's going to be peaceful. I mean, if you look at just the escalating the rationale for violence from that side, because our president is a Nazi, right? And there's no other way around it. That's what they say.
And there are some Democrats out there, I'm not saying all of them, but some, and that if you disagree with them, you're a racist, you're a sexist, you're, a Nazi. They're putting these labels, and you can't even have a halfway peaceful, rational debate with a discussion. You can't do this anymore. And college campuses are not helping this matter. You used to be able to do this in college. Can't do it anymore. College campuses, used to be bastions of free speech. That has changed a lot. And so this is a new normal. And you know what, Phil? It freaking sucks.
Yeah. Right.
It freaking sucks. So, we could talk about this for a lot longer, but a couple more things before we wrap up the show. So we will touch on gold and silver and crypto here as we wrap things up. So we're recording this, like I said, on Friday, July 13th. If you're superstitious, listen to this tomorrow.
Yeah, for sure.
Where gold now is below key support. Well, gold is back above. It was below support levels when I looked a couple minutes ago. It was at like $12.35. Now it's back to $12.41. Silver is at $15.77. There's people in the gold community, and I'm friends with a lot of these guys. They're smart guys. I don't know why they keep saying this, because a lot of them are not making any money off this. They're not getting rich saying this, but they are saying that gold's in a stealth bull market. And you know what, Phil? Really, since 2011, it is not true. Okay. So since gold did have its lows in late November, December 2015, it has rallied. So the evidence that I see based on the charts and the price action of the gold price in US dollars, in my opinion, is that gold has had a bear market rally since then, since late 2015, or gold is just in a neither bull market nor bear market, range-bound market for now.
Yeah.
Not a stealth bull market. So it's one of those two scenarios of either a bear market rally or it's a range-bound essentially flat market that a lot of people would say is boring, a lot of people would say to avoid. That doesn't mean you should sell all your gold and silver. It just means that you're going to have to be patient. However, there are companies, and unfortunately it's not most of the mining companies because a lot of them, in my opinion, are still poorly run, although some of them have started to improve their operations. But at these prices, Phil, especially in US dollars, the gold price, these are not prices where the primary gold and silver miners can make a lot of money. A lot of them are going to be treading water. Some of them may even be losing money now. So we're back at that stage where they're going to have to do what they have to do to survive. Unfortunately, it's been this way for 7 years. So, but go back and look at the largest, and I've been preaching this, go back and look at the 5 large royalty and streaming companies, precious metals. The shares of Royal Gold in the last 4 years are up over 200%. They grew their revenues and earnings in spite of the gold price in US dollars not doing anything. Franco-Nevada shares since 2007 are up almost 400%. And since 2000, the last, I think 3 years, Franco-Nevada, 3 or 4 years, Franco-Nevada shares are up about 70%.
Yeah.
And they have a strong dividend. So there are companies that are actually benefiting from the gold and silver price doing nothing. It's just not most of the miners.
Well, after the brutal beating since 2011, by the time we reached the end of 2015, I took all of Mrs. Kennedy's retirement money and I said, man, forget this. I pushed all her chips into mining stocks at the end of 2015, and I'm sticking with it because I'm like, how much worse can it really get? You know, Huey down near 100.
Well, Did you see Lewis's videos from the last couple days about the demand increases in Indian silver demand? So Indian silver demand has exploded. I think it's like 2,800 ton demand increase, some number around those lines. So it went from, I think it increased by about 30% Indian's physical silver demand in the last year, and the silver price went down.
Wow. Yeah.
It shows you how much the paper market is in control, right? Because, if it was on supply-demand fundamentals and the demand for the actual metal increased like that, normally that would move the price higher if this was a normal functioning market. At least one would think so.
Yeah, for sure. Hey, just interesting. I know we're not going to talk about crypto on this episode, but since it happened while we were talking about it, it looks like Coinbase has decided they're in discussions, which has pumped the market. Just the simple tweet that they're having discussions of adding Cardano, Zcash, and a couple others to Coinbase. So that happened while we were on the show here. So I just thought I'd say that people should, it's been brutal in crypto in 2018. But it's not going away. Just like gold and silver aren't going away. It's going to stick around. There will be winners and losers. And I know we'll talk about those in future episodes.
Yeah, did you see that, before we end the show, did you see a couple things on crypto? Did you see that famous technology investor Mark Andreessen announced in the last month or two that he's starting a $300 million cryptocurrency fund? So he thinks that they've taken enough of a beating where he wants to raise capital and start buying and holding a number of the cryptocurrencies too.
Yeah, no, it's exciting. There's lots of reasons to be excited. One thing I was going to tell you about, I started using the Cash app, which is issued by Square. And I'm a nerd when it comes to this stuff. I play around with a lot of apps like this. And I'm really excited about this because you're able to buy Bitcoin and sell it with almost zero conversion fees and a very low exchange rate that is it's better than Coinbase. And unfortunately, they only sell Bitcoin right now, but I really think that this is what people are going to move to, and it'll be a way for them to spend their Bitcoin down the road just by, like you would Apple Pay, just waving your phone. This has been the hurdle that we're always wondering, like, how are people going to do this? And obviously, there's going to be a big debate on the tax consequences of, well, hey, what'd you buy your Bitcoin at, and what'd you buy something with it, and how are you going to account for that, and all that nonsense. But anyways, I sent you the link. I don't know if you want to share it with folks on the description box, but it's very easy to use, and you can link it with your bank account. I think there's a reason that there's tens of thousands of reviews on the Cash app already. I think this is where millennials are going to go. They're not even going to have a bank. And if I were Wells Fargo, Chase, any of these places, I'd be very worried because I think their business model is very outdated. I joked on my Twitter account that the last two blockbuster videos are in Alaska, and one of them just closed. Now there's only one in the whole world. And hopefully we can all root for the day when banks are closing and there's only one or two of those left as well.
Last question before we wrap up the show. So we're at a Bitcoin price when we're recording this. Bitcoin has rallied today. It's up to a little over $6,200 per coin. The research reports I've looked at, some people have put the cost to mine Bitcoin at commercial scale. So if you've raised capital or if you've gotten investors to build like mining rigs, rather than, you or me mining Bitcoin on a backup laptop or something, that's not a commercial scale thing. But the commercial scale Bitcoin mining operations, it normally costs like at least $6,500 to mine the coin. So do you that's to verify transactions. So do you think that's going to have an impact at some point in terms of Bitcoin's not going to stay much lower than the cost of verified transactions, or do you think that's really it's not really that important? I've also seen research reports too. I don't know if you saw one where it said that the cost to verify transactions, commercial scale Bitcoin mining, one of the reports I saw was like $8,300. So the research reports that we've seen are between $6,500 and $8,300 for commercial scale Bitcoin mining. So what are your thoughts on that? Do you think then ultimately that the cost of verified transactions is going to affect the price, or not really?
I would say that my opinion or thoughts on this for our audience would be meaningless, because I don't think my opinion matters. I think what really we have to focus on is the fact that on Monday, I'll just pick an arbitrary time frame. On Monday, Bitcoin will be up over 225% since a year ago. Everyone's focused on just how high it went and then just how much it's fallen. But a lot of these guys that are crypto committed, they are in this for the long run. They look at the Mayer multiple and they say, whoa, Bitcoin against the 200-day moving average is higher 92 to 95% of the time. I'll buy $6,000 Bitcoin. And if they're mining it, they're like, hey, I'm going to go ahead and hold on to these, because I believe a year from now, I mean, if you're a Bitcoin miner, do you think you're just in this to make a quick buck? Do you think you're James Altucher or, Ty, whatever his name is? They're in this for the long game. They've got a lot of capital invested in this. They're just going to stockpile those Bitcoin until they're worth what they think they should be, tens of thousands of dollars. So I think this is just a short-term bubble. They are coming out of a short-term bubble, and Bitcoin or another major cryptocurrency. I was very careful on Lewis's show, right? Is Bitcoin here to stay? I don't know. I wish I did, but I do firmly believe that cryptocurrency is here to stay. There will be a winner right now in the not in the foreseeable future. It'll continue to be Bitcoin, and probably some other quality projects too. So those are my thoughts there.
We live in very interesting times. There's definitely not a shortage of things to talk about every month or so when we do the show.
Yeah, you're right.
Yeah, I mean, we could basically just spend a whole show talking about like all the crazy things that the politicians said back and forth to each other, or President Trump and his tweets. It's getting kind of it's turned into basically like a reality TV show or circus atmosphere, like you said. But obviously, the majority of the show will be on investing in the economy. So it's really crazy, though. We'll see what happens in the future. I want to thank you again for your time today, Phil, and thanks for listening to episode number 43 or Welcome to Dystopia.
Yep, see everybody next time.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetformainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.